Hi everyone, welcome to this quick update. So, what's going on with Macy's? Once the crown jewel of department stores, Macy's is now facing a reality that many brick-and-mortar stores dread closures. But is this the end for Macy's, or could it be a strategic pivot? In this video, we'll break down why Macy's is closing stores, where this is happening, the impact on consumers, and most importantly, how it could affect the company's stock and its intrinsic value. Stay tuned as we reveal the discounted cash flow valuation in just a few minutes. The retail landscape has been changing rapidly. Macy's closures have been triggered by a combination of factors. First, the rise of e-commerce has drastically changed consumer behavior. With the convenience of shopping from home, many consumers now prefer online shopping over physical stores. Second, the pandemic accelerated this shift, forcing retailers to rethink their brick-and-mortar strategies. Moreover, inflationary pressures in the past few years have further squeezed consumer spending, making it harder for retail stores like Macy's to thrive in the traditional sense. Combine that with rising costs of running physical stores and we have a perfect storm. So why close these stores? Macy's has been strategically closing underperforming locations to cut costs and refocus on markets where they are profitable. This isn't just about closing stores for the sake of it, it's a shift towards becoming a more digital-first brand. Macy's is investing in their online platform while also rolling out smaller format stores that cater to specific markets. This leaner, more flexible approach could help Macy's regain momentum, but will it be enough? Most of the closures are taking place in suburban and underperforming mall locations, where foot traffic has significantly dropped. These locations are often costly to maintain and yield lower returns compared to stores in major metropolitan areas. By focusing on high-traffic, profitable markets, Macy's aims to reallocate resources to drive growth where it matters most. For consumers, these closures may lead to inconvenience, especially for loyal Macy's shoppers in suburban areas. But it also speaks to a broader trend in retail. Big department stores are no longer the primary shopping destination. Instead, smaller niche stores or even direct-to-consumer brands are taking their place. Consumers are now opting for convenience over tradition, and Macy's shift toward online shopping might be the lifeline they need to compete in the ever-changing retail environment. Now let's talk about how these closures could impact the financial health of Macy's. On the surface, closing stores might seem like a negative, but it's actually a strategic move to reduce operating expenses and improve overall profitability. However, it's important to note that Macy's revenue might take a short-term hit due to lower foot traffic and store counts. In the long run, if Macy's successfully shifts to a more e-commerce driven model and capitalizes on key markets, we could see their margins improve. So, what does this mean for the stock? Investors are often cautious when they hear about store closures, as it can signal deeper issues within the company. Sentiments might take a hit initially, leading to short-term stock price declines. But if Macy's management can prove this is a calculated strategy to boost long-term profitability, the stock could rebound. As always, investor sentiment plays a huge role in the stock price. Short-term dips could lead to long-term gains if Macy's executes this plan successfully. And now, the moment you've been waiting for? What's the intrinsic value of Macy's stock based on a discounted cash flow (DCF) analysis? Using a conservative 2% annual growth rate in the DCF analysis, we estimate Macy's intrinsic value to be $19.34 per share. Make sure you check out the Google Sheet to easily perform DCF analysis for any stock. If this is higher than its current price, it might indicate an opportunity for value investors. If you're unfamiliar with how a discounted cash flow analysis works, we've got you covered. Check out our previous video on DCF as well so you can get the hang of it. I put down the link to the video and the Google Sheet for DCF in the description below. So, should you invest? As always, it depends on your risk tolerance and belief in Macy's future strategy. But remember, store closures aren't always the end. They can be the beginning of a new chapter. Thanks for watching. If you found this video helpful, don't forget to like and subscribe for more deep dives into retail and stock investing. Also, let me know in the comments what you think about Macy's or what other company has caught your attention recently. Until then, stay financially awesome.